All right, we're going to kick this thing off. Welcome to Cyber Insurance and the War on Ransomware. We've got an executive panel discussion for you all today here. Today we're joined by Arctic Wolf, Marsh Insurance, and Hewlett Packard Enterprise. Want to say thanks to them for joining us today and conducting this conversation. The discussion today, so we're going to categorize this into 4 different areas. The industry that we're seeing, all the changes that have happened, and just the rise of ransomware. How business and IT leaders need to partner together as they tackle those challenges. The role of cyber insurance in an incident response plan, and just when you're dealing with the remediation. And then just the big topic, which I know is top of mind for a lot of folks, increasing controls, the different controls that insurance providers are requiring nowadays. Let's meet our panelists. Let me try to unshare the screen here. Let's start with Tom. You're actually in my top left right now. If you don't mind introducing yourself from Marsh Industries, Tom.
Sure. Tom Reagan. I'm with Marsh. We're the world's foremost cyber insurance and risk advisor. I've been here for about 8 years, leading our U.S. and Canada cyber practice. And so we help organizations understand, measure, and manage their cyber risk, and then buy cyber insurance on the back of that to better protect them.
Great. Aaron, you're actually next on my screen, so let's go with you next from HPE. Aaron.
Hey, good morning. Aaron Scott. I have been the risk manager of Hewlett Packard Enterprise, formerly HP, for approximately 11 years. Previously spent many years at a large insurance brokerage house, and I have the responsibility today of purchasing large portfolio of insurance globally for HPE, including cyber insurance.
Thank you. Tim, you're up next from Arctic Wolf.
Good morning. My name is Tim DeWard. I'm a director of sales engineering at Arctic Wolf. We specialize in managed detection and response services. So think like SOC as a service, managed risk, threat vulnerabilities and management, as well as managed awareness training as well.
Great. Walter, you're up next.
Walter Verskorn. I am with ISG, and I lead our incident response teams and our, I guess, anti-ransomware campaigns and cyber threat campaigns throughout the company, and try to evangelize that throughout our client base, both here in our local territories as well as nationally.
Great. And Walter, as I've mentioned on other previous webinars, is the originator of the first 48 when ransomware strikes idea. So we've had a few webinars on that recently, and those are very popular. It looks like I've got to see a bunch of folks who have joined that before. And I'm Scott Strickler, Director of Marketing, as I mentioned. I don't know a ton about cyber insurance other than what these smart people have told me. So my role is just to get a variety, and the whole goal here is just to get a variety of angles on this topic. And as you can see, we've got, from the business side of risk management with Aaron, Tom representing the insurance industry, Tim with the SOC. That's a cool angle to understand what they see when it comes to insurance. And then Walter, incident response, of course, has to deal with insurance when the actual attack happens. So, Tom, I'm going to direct the first question at you. Can you start just by giving us a state of the industry from your perspective?
Absolutely. And thanks again for having me. So, the state of the cyber insurance industry is one of rapid transition. Over the past several years, the industry has seen both rapid growth. Cyber insurance premium, so the amount of cyber insurance people buy is in excess of $10 billion a year, which is up quite a bit from when I started in the space almost 20 years ago. But what we've seen in the past 2 years is on the back of the ransomware epidemic that organizations have faced rapid contraction in available capacity, so the amount of cyber insurance they could buy, a increase in the price they pay. In the fourth quarter of last year, we saw clients paying up to 125, 150% more than they were the year prior, and much more detailed underwriting scrutiny than we've ever seen in the past. So organizations really being challenged to demonstrate a new standard of control in the environment. And I liked the earlier poll about why are people here, and the most popular answer being primarily to make their organization safer with the right controls, because I think that's an accurate reflection of what the industry has been going through as well. Just trying to figure out what are the correct things and the necessary standards for organizations to implement in order to properly secure themselves in the face of the ransomware threat. And as a new consensus has emerged over the past year or so, as well as the rapid advances in how organizations secure themselves, we're actually already entering a period of transition. So organizations have been whipsawed by a very aggressive change in the cyber insurance market over the past 12 months, but we're already looking forward to the next evolution as organizations start to see a normalization in the underwriting process and pricing. Now, it's a new normal. It's going to be more rigorous than it was before, and insurance capacity is still going to be relatively expensive. But as always, we say that, you know, this is really a reflection of the underlying value. The prices are going up because the insurance is being used, losses are being paid, and the cyber insurance industry is really a mirror, not a lens. It's reflecting what's happening in the broader cyber economy. And as we all know, it's been a very challenging 24 months with quite a lot of storm clouds still on the horizon.
Great, thank you for that. Aaron, so you're someone who manages risk for your company. So what are you seeing as the challenges with cyber insurance as it relates to insurance for you?
Yeah, so thank you, and good morning. The process this year, these are annual policies and annual negotiations with the underwriters. Our process was April 1st, and I would describe the process for this year, the purchase of cyber insurance, really completely different than anything I've experienced in the past. The amount of information being requested, from the just the involvement across the company, from well beyond the cyber insurance group into the IT, the network management, the business, from a product security standpoint. The information was tenfold what we had been asked to provide in the past, with a level of detail and follow-on questions very rigorous. And so part of our process ended up putting our business people on the phone directly with insurance companies, because I think one of the concerns is that from the applications to the insurance companies, things do get lost in translation. So the more kind of direct to have the people with the knowledge telling the story of the company was proved very beneficial.
Great, great. Tim, what are you seeing on the SOC side of things from how insurance is engaged? You guys are engaging with insurance providers.
Yeah, absolutely. So I'm going to actually work off of what Aaron just said just a moment ago. These policies tend to be about 12 months in duration. And so there's a renewal that happens every 12 months. And one of the things that we're seeing from our side, working primarily on the IT side, is that as these new controls are being asked to be put in place, some of the carriers we're finding out are asking that these controls are in place 30, 60, 90 days prior to a policy renewing. One of the controls is core to what we do, which is 24/7 monitoring. And so some of these controls have to be in place, again, before the policy renews. So if you start the policy renewal process 3-4 months before it actually renews, what we're seeing then is a number of surprise IT projects where finance, CFO, risk management is working with the insurance company. The insurance company is saying these are the controls that need to be in place, and then at the last minute they're getting tossed over to IT. And IT has to very quickly go out and figure out, okay, which MFA vendors are we going to use, which EDR tools are we going to implement, which 24/7 monitoring are we going to implement, and they have a very short window sometimes to get those controls in place. And so one of the advice that I've been giving, you're going to, I think, hear this throughout this webinar, which is if you're in IT, you'd be wise to actually reach out to finance, CFO, risk management, whoever manages your policy. If you're on the other side of the house, reach out to IT and start that collaboration process immediately. It will save you a lot of frustration down the road.
Great. Walter, how about you? What are you seeing from your side as far as dealing with insurance and with you running an incident response team?
So what Tim just described is a lot of what we see lately. So 2020, 2019, 2020, 21, people were acquiring policies, right? And they were easier to get in 2019 than they were in 2022. And so we're seeing this reaction of clients calling us saying, my insurance declined me because I don't have MFA, I don't have EDR, there's a laundry list, right? And so we've watched this evolution of a 1-page, 2-page, 3-page, now 10-page questionnaire related to, reams of documents needed. And unfortunately, even in the renewal process, sometimes 90 days isn't sufficient time, even regardless of what Tim said, even time to collect that data to provide back to the insurance providers. So that makes it a challenge, and that kind of ties into the understand what your policy covers, both from an IT side and a finance side, or on that side of the house. There are assumptions made that shouldn't be made at the time, and then you also see, the challenge of not understanding who can be your response team if you are hit. Right? What is that plan, and how does that go forth? Some insurance companies have the service built in that restricts you to who you can use. So if you have a provider you've been using for 15 years or 10 years, they know your network, things great, and you get hit, your policy may dictate a third-party group coming in that has no understanding of your business. And at the point when they come in, it's not their plan to understand their business. Their plan is to stop the breach, remediate, and try to solve your business. And then even in that case, they may or may not bring you back to a state where you think you should be. It's a couple different things that happen with different providers as far as how they execute on that claim. So you could equate it to homeowners insurance, auto insurance. They all have those, very detailed what we will and will not pay. Understand the better the policy, the better the outcome is. Tom alluded to the rising cost. That insurance is completely, you get what you pay for. There's no brand new network for $1,000 a year on cyber insurance anymore if we get hit, right? They are expensive policies, but they assess that to the cost of your business. And what we've seen is an awakening sometimes from some folks in the organization that were clearly unaware of the IT infrastructure investment they had made over the years, because our IT budget this year is $500,000 or $1 million or $2 million, whatever. Why is it, $6 million to fix this? We have all this stuff, right? It doesn't work that way. So, those are the things. And where I don't see insurance falling short, I think the communication and understanding is where the shortfall comes. And actually, I think probably the broker does a fairly good job of explaining it. It's what I call selective hearing, is what I hear. Got a policy and we're good. And that is not always the case.
Tom, you're nodding your head. What do you have to say about that?
Well, I agree completely. I think the concept you're talking about in terms of building the network back better is one called betterment. Yeah, right. And you're right. It's a really critical challenge because, unlike where you're buying a car and they give you another copy of the one you had, nobody builds their network back the way it was before. And I think that really does make quite a difference because what we're recognizing is that, as you said, there is definitely a lot of selective hearing on the part of the technical community. And I think that the most advanced organizations are seeing the insurance interaction driven in partnership between both the finance risk management function as well as information security. The parts need to fit together. And I also like your comment, Walter, which goes to a broader theme of preparation. Even in the face of the purchase of cyber insurance, organizations that don't properly prepare and test and communicate in advance are still going to have challenging outcomes. The insurance facilitates things, it makes it better. There's a lot of resources, but if your organization hasn't practiced or rehearsed, and this is the first time you're looking through the policy and how it works, you're going to have real challenges, and the recovery under the insurance policy is going to be ultimately the least of your concerns.
Yep. And actually, Tom, I had a question come in here. I'm going to try to summarize it here, but he's asking, Joseph's asking, what determines the rate for what each customer pays, knowing that there's a lot of factors, but what's the price range for companies from as small as 5 all the way up to 1,000? How does that work?
Yeah, that's a great question. So first of all, the price absolutely 100% depends. As a professional broker, I'm never going to give you a straight answer. But what I would say is that we track the overall premium versus the limit of insurance. and generally the premium is between 3 and 4% of the cost of the insurance. So $1 million of insurance is probably going to cost you $30,000 to $40,000. That's up from $10,000 to $20,000 as recently as 24 months ago. A lot of that is driven by the underlying loss environment, but a lot of it also has to do with the expansion of services. Remember, when you're buying a policy like this, you're not just getting the payment, you're also getting access to the expertise and services. And while you might be comfortable that you've got it under control, experience will tell us that you almost certainly don't. And you're going to need to rely on a variety of outside parties to make that happen. So I think the way to think about it is, what's going to drive the difference in pricing between 30 and 40,000 or 30 and 45,000, or for many organizations, 30,000 and nothing? A lot of that has to do with the nature of the organization. It makes a big difference who you are and what you do, but a tremendous amount of that has to do with the maturity of the organizational controls, particularly around what we'll come to later, these critical 12 controls that have emerged as the key items for organizations to have in place on the back of the tail end of the ransomware epidemic.
Mm-hmm. And there's thank you, Tom, that was great. There's a clarifying question. He said, is that 30 to 40K a month, 3 to 4%?
That's a year. Generally, policies are written on an annual basis.
Okay, just wanted to clarify that. Perfect, thank you. We also have one, they got a bunch coming in here. Or is it like $10 per employee? I think obviously the costs are on top of mind for folks as you started talking about that. Is there any per employee based pricing? Is that nothing like that?
Not really. Generally, the primary elements would be the size of the organization measured in revenue, and then the nature of the operations, and all that then gets adjusted by the quality of the control.
Gotcha.
I would add to that, Scott, just to add to that question. So, one of the things I hear a lot of questions about what's driving the cost. Here's what helps drive the cost down. Have the right controls in place, right? Understand what your incident response plan is, right? There's a laundry list. I think Tom calls it the rule of 12. I think that's what you call it, your book of 12 or 10 of things that you should be doing inside your network that will help you drive your premiums down, right? If you're very well fortified, you're a lower risk. If you're not, have an EDR, encrypt your backups. All those things matter. Work with your partners. They will come in and do, we do this on a regular basis for our clients and even some that aren't. We do assessments or gauge the environment for them. Where are your holes? How is your Active Directory managed? What is the plan, right? And they can help you get that roadmap, because if you have insurance and you have a renewal coming due, be assured it's going to be a bigger process than it was last year. And try to get ahead of that by understanding where those holes are that need to be filled, and then work with a partner, that can provide the intelligence into the various experiences they've seen with different products and services to understand which perform better. And there are reasons why they perform better. There's a reason some stuff is really cheap. It just doesn't perform as well. Yep. Lots of little things. We can go into that if somebody has that question later on, Scott, but that's for that too. Yeah.
Well, and I think some of the questions have really expanded. I mean, I agree with all of the network questions, but new questions this year are, what are the process for vendors and the vendor security? How are you vetting that? How many records do you have? How much personal data? How much protected healthcare data? How are those records stored? Where are they? How are they segmented? So it's the network part is, kind of now like it's a must-have, right? What are you doing and how do you prove it? But then the questions are much more broad. Mergers and acquisitions, how are you evaluating an acquisition? Are you implementing them into your network or saving them? So getting started like now, I started 4 months in advance, and now today I'm starting 12 months in advance.
What's interesting, Aaron, about about some of the things that you just said, is it seems like previously a lot of the questions were what questions, and they're shifting to how questions. What I mean by that is what tool do you have in place for the questions of the past, right? Which tool, which control? We're going to talk about some controls here in a little bit. And those are important. Having the tools, having the technology is very, very important. But implementing them properly and having a process around how to use them is equally as important. And the reason I say that is, as a SOC provider, of course, we see threats coming into customers' environments all the time. And when we do see an environment that has been breached, what's interesting is a lot of times they actually had the right technology in place. They had bought it. They had to some extent implemented it, but they hadn't properly put controls and process around it. So for example, they were getting tons of alerts, but nobody was looking at the alerts, and they didn't know what to do with the alerts as a result. And so it's not just what tools and controls do you have in place, it's how you've implemented them and how effectively. That's the difference between, quite frankly, getting breached and not getting breached from what we've seen.
Good. Tom, there's a question that came in that might be relevant for you. So they say, is it going to be required for 2023 that an organization will need to do an annual cybersecurity assessment?
Not specifically. I don't think that they're going to say, here's, give me a copy of your annual cybersecurity assessment. But what I'd say is that as they look through a variety of different controls, they'll be looking for those controls to be updated periodically, often much more frequently than annually. In addition, cyber is an ever-changing landscape, as we all know. One of the challenges is that because of that, you're going to need to be looking at yourself every 12 months to keep up with that. So while they won't directly say, give me a copy of your magic annual review, if you haven't done a comprehensive review and roadmap around your cybersecurity strategy every 12 months, you're going to have challenges. And I think that's, kind of build on some of the comments from Tim and Walter. One of the things that's really interesting is I think we've moved past the era of, let's call it cybersecurity opinions. I've been doing this for a long time, and there's been a lot of different opinions from practitioners as to what does and does constitute a minimum standard or a standard of care. One of the things we're seeing right now is that the market is considerably less interested in your personal opinion or take on a lot of these issues, and the consensus is emerging. And so you're entitled to your opinion, but that doesn't mean you're going to be entitled to insurance. I think that's another reason why the annual review process is critical, is to solicit that outside feedback. There's a lot that's happening in the industry that then becomes distilled in the annual assessment process and becomes available to the firm. It's necessary for practitioners to keep, taking in that information, not just from industry sources, but from the very real, tangible feedback the insurance that they provide. They're paying the losses when things go wrong. They know a lot about what it takes to keep the firm safe. And so that annual process is a critical part of that integration into the cybersecurity roadmap.
Good. Here's another one that might be for you. Do premium and coverage vary greatly based on the type of MDR tools or vendors that are in place?
There's definitely some focus on the specific vendors. Certainly when it comes to the more emergent categories, the underwriters are going to look for utilization of familiar tools. And as Tim highlighted, it's not just a question of do you have those tools, utilize them. One of the questions underwriters are starting to ask now is exactly how many service accounts do you have in domain admins? That's a very specific question, and why those tools are configured that way. So generally, underwriters try to go out of their way to avoid picking specific winners and losers, but they definitely will have a greater or lesser comfort with different tools based on their expertise. And harnessing that is a big point, a reason why we put together the Cyber Catalyst program several years ago, which HPE was a launch partner of ours on, to highlight the fact that sometimes practitioners are left trying to figure out what's the gap between the control and the actual implementation. That's a big focus for us in our marketplace services. It won't come from the carriers, but you'll need to know it to get the right controls in place and configured correctly.
Great. So we are getting a number of questions. We probably won't get to all of them, everyone, but what I want to do is switch over to the controls portion of the presentation here. So let me share my screen here, Tom. I was going to put the top or your 12 controls, if I could get my computer to work. Oh, there we go. You guys seeing my screen? Okay.
Yes.
If you could maybe speak to this, and what I want to let the audience know is we'll have a poll question right after Tom kind of speaks to this a little bit, just that talks about the controls that you have in place, just to get an understanding of where people are at. So go ahead, Tom, why don't you speak to these 12?
Sure. So these are the 12 critical controls. So one of the things we do is we work with dozens of cyber insurers around the globe for literally thousands of clients. And as we go through that process, we capture all of the information that they're soliciting and digest it into what are the real questions that are driving the insurance process. And out of that have emerged these 12 critical controls, particularly on the back of the ransomware epidemic, that are really driving insurability. What I would say is that these 12 are now the key to being insurable, and particularly the 5 orange ones, the top 5. Absent a robust response around these capabilities, many insurers are going to offer you little or no insurance for your organization. So multi-factor authentication isn't just for VPN anymore. It's for all internal admin and privileged access. That's really critical. EDR has gone from a nice to have or emergent technology to a minimum standard. Protocols and rigor around backups. The number of organizations who go to pull the backups off the shelf and can't do so is staggering. Privileged access management, there's no substitute for it. It's now a standard. And then strong email filtering and web security. So these controls as a whole are the new standard and the new norm. I think the challenge we've seen most frequently is that for a lot of organizations, either these were seen as too advanced for them to implement, or they're somewhere on the proverbial roadmap. I think the requirement now is that if they're on your roadmap, you need to put them on the roadmap a little sooner than they might have been in the past, or you're going to have a real challenge. Forget the insurability part. It's important. More importantly, it's putting your organization at risk.
Great. Some folks are asking, has there been any pushback where customers are foregoing cyber insurance? Premiums have gone up tenfold in the past 2 years, as well as needing to spend more for products to fulfill those new requirements. What's your guys' take there? Tom, I think you alluded to the fact that when we chatted earlier about some folks are foregoing insurance. Is that what you've seen?
Generally, no. In fact, at the end of the fourth quarter, despite the 125–135% average price increase, about 8% of our clients actually increased their insurance purchases year over year. So I think organizations are recognizing that in the current risk environment, one, there are ultimate limitations on mitigation. You can only do so much to protect the firm. At some point, you have to recognize that risk still exists, and cyber insurance is a very effective way not only to transfer it, but also to help build organizational resilience, because you get access to all of those services before, during, and after an event to help rebuild. So, I do think that organizations are being forced to make tougher financial decisions around which controls to prioritize. I think that kind of goes to my comment about the roadmap. If these aren't in your organization, they need to be, and if they're on your roadmap, you need to move them up, sometimes potentially at the expense of other things that might be more novel or exotic, but absent these, the organization is very seriously at risk.
Scott, one of the things that, that comment, I have seen folks forego the insurance, right? And you see that because I think historically IT has been treated as a cost of doing business, right? It's similar to your lights in your building. You have to have it. You have to have a sign. And I think here over the last, call it 24 months, IT has met insurance, has met business viability. And so you have to, as a business owner or decision maker, decide what's at risk and can you recover from it? Because I've seen plenty of these through our remediations. Some folks have a very challenging time recovering from it because it's just so catastrophic. They thought, not me, I was Tom's Pizza, but now I'm nobody, right? And I think that And so it's similar to getting car insurance. You can drive uninsured until you hit the wrong person, and then it becomes a real issue. And it's similar, you know, equate car accidents to ransomware. Most of the attacks are not, they are not targeted. They are these broad fishing nets, if you will, and they will find vulnerabilities through patches and all these different things. I actually think in some instances what the insurance industry has done with creating a minimum standard, if you will, it is going to help the entire technology community take a better, fresher look at what they probably ignored for years. Even though some of the folks on this call are in the IT department, I bet more than half of them have asked for additional funding for additional security and been declined for whatever reason that the business gives. But now there's another viable fact here that says, hey, maybe you should take a harder look, to Tom's point. Maybe this shouldn't be Q4. Maybe this should be Q2. Right.
Scott,
Some of these are very difficult to implement, by the way.
Yeah.
That's the sad part.
Yep.
I think two things that I would add. I mean, if you're a public company, this is now a board issue. And then the second, depending on, you know, what services you're providing, is it's very much a contractual requirement. So from our perspective, technology provider, I mean, this is not, it's not something we could forego because all the customers are requesting it, and those type of requests and having to confirm cyber insurance, I mean, that has gone up exponentially the last few years.
Yep. That's great.
If I could just build briefly on a couple of Walter's comments. I think one thing that's really critical to understand, I loved your point, Walter, is that I spend a lot of time talking to business leaders and security leaders who have a false notion of why they might be at risk for a cyber event. The notion that I'm not in a highly desirable industry or a vulnerable geography, or I have a low organizational profile, has almost nothing to do with how organizations are actually selected. It's very much to do with technical bases and the broad nets that ransomware gangs cast in order to sweep up victims. And so I think it's very naive and dangerous for organizations to think that they're not a target for reason A, B, C, D, or E. The reality is that you don't know why they're targeting you. The other thing I think it's important about the value of cyber insurance is very recently we've started to see in dark web chatter the notion that ransomware gangs are now anti-targeting organizations with cyber insurance, because when organizations have this cyber insurance, one, it makes them more potentially resilient to having to pay the ransom, and two, the insurance organization is almost always going to bring in a professional ransomware negotiator who is going to drive the costs down. So organizations with cyber insurance, at one time there was a fear that cyber insurers were fueling ransomware because they were providing a mechanism to recover ransoms. Today, there's, I think, a growing recognition that actually insurers, because they're helping organizations get a little more context and a little more backbone, may actually start to tamp it down. And that's a pretty important value. Organizations that can rely on the advice of experts and professional ransomware negotiators are going to be at a much greater advantage when they have to face off against a criminal gang who's got the whole organization held hostage.
Walter, have you seen that with some of your remediations where they?
We have. We've seen. I mean, what haven't we seen? But you know, notably, we've seen several times where the hackers actually understand the policy. They've read the policy. They know the payouts, and you know, in those cases, to Tom's point, professional negotiators will come in and try to help if that's the situation. Hopefully, you know, in a few of those cases, those clients did have off-domain secure backups and had some things that they were, so they didn't have to really go down that path. But it was clear that the hackers knew exactly down to the penny what that policy would pay out. And you know, it is always a worrisome thing when you pay a ransom. One, that, not mistaken, it hasn't changed. The federal government kind of frowns on that. Number two, there's no guarantees. We've seen where folks have paid it, and then a week or two later, they're encrypted again, right? So there's no guarantees on that, and usually the payouts are fairly sizable. So those are significant amounts of money. Don't know exactly how the insurance companies handle a payout and then a breach again. So those are all, be Tom questions, but clearly, it's an evolving environment for sure. But again, putting the right controls in place, even just multi-factor. I tell people, if you can't do anything else, put multi-factor in place in all your systems and across your admins.
Yep.
If you feel like you can't afford this, and most of these products have become relatively affordable too.
Yep. So Tim, question to you, since you're in the SOC side, how long are bad actors typically in an environment before they execute the actual attack? Are you guys have any knowledge of that? I mean, if they're getting financial statements, they have to have been in there for a while. What are you seeing on your side?
Well, you bring up a good point, Scott, which is, and Walter, building on top of something you said a moment ago, not only a lot of times are they reading the cyber insurance policy, whether you have insurance or not, a lot of times the bad actors are also reading financial statements.
Right.
So they know how much cash you have on hand as an organization. They know what assets you have that can be liquidated very, very quickly. And they know exactly the dollar amount to ask for in a ransom that you can produce very, very rapidly. Now, to read financial statements, to read the insurance policies, to set up the encryption so it runs across all the systems and runs across all the systems undetected, because you can't be spiking CPUs. Running encryption is CPU intensive. To do all that undetected requires that an intruder is actually in an environment for a very, very long time. The industry average for what we refer to as dwell time, that's the amount of time that an intruder or bad actor is in a customer's environment, is about 200 to 208 days. That's the average. Seems like a really long time, and it is a really long time. And again, if you think about it, to do all the things that they are doing, they're going to need a substantial amount of time in the network. And so that's kind of the average amount of time that we see. We certainly have seen and heard of instances where it's much, much longer than that. But the point is, they can actually exist in your environment for a very long time, going undetected. When I say undetected, sometimes there is a tool that is doing a low-level alert, and if you're not looking for that, you're not going to find it. Right? Like I mentioned earlier, a lot of times what we find is the proper tooling existed in the environment. It just wasn't set up, configured, and or more often than not, it wasn't monitored. It wasn't monitored properly, where someone who knows can say, okay, this low-level event plus this low-level event plus this low-level event actually equals something much, much greater, right? And so that's kind of what we do at the end of the day. Is we come in, we can help with that so that we can bring your detection time down from hundreds of days down to a handful of minutes.
Great. And so are you seeing when you guys bring a client on that there's already actors in there, or how does that work?
Yeah, it's interesting is a lot of times when we do sign up a new client and then we go through the onboarding process with them. In fact, I heard a story of a customer not that long ago that we onboarded, and within hours of onboarding them, we found latent ransomware in the environment. It hadn't received its final payload yet, essentially meaning it hadn't fully executed yet, but it was there in the environment, ready and waiting to go. And again, within hours of onboarding them onto our service, we were able to find that and actually remediate that and get it out of the environment before it became an actual attack.
It's awesome. You're under attack right now. Hey, back to
I was
Aaron.
going to build on that for 1 second, the one thing I think this is a key lesson again and again for practitioners, this is not going to go the way that you think it's going to go, right? In the same way that I think organizations overestimate their ability to identify why they might be at risk, I find practitioners overestimate their ability to imagine how these events are going to unfold. You have backups, and sure, you can restore them, but can you actually deploy them and get the system up and running in real time? You think you found one threat actor and you find another one, and now you've got an overlapping event. These are incredibly common occurrences. And so since we really deal exclusively in the unusual or the unfortunate, we're far more familiar with it, but it is far more common for things to go sideways and against plan than for organizations to respond as quickly and smoothly as they anticipate. And so I think if people had a little more expectation of the unexpected, they'd be well served. And I think that's the backbone of the true goal, which is not only protecting the firm, but making a resilient organization. That's why it's so critical to look at things like cyber insurance, because they don't just give you money, they help make the organization more resilient in the face of uncertainty, not just before, but during an event.
So, quick fun side story. We just published some research on this very topic, which was there was a customer that was breached by two different organizations at the same time. And the one bad guy found the other bad guy in the environment and actually notified the customer saying, hey, I'm in your environment. I'm essentially hacking you. But by the way, there's this other hacker in your environment. And if you work with me, I'll help get them out of your environment. How's that for a fun story? So when you talk about the unusual, Tom, that's kind of a very interesting situation.
Aaron, I was going to go back to you as far as you've put some of these controls in place and done the planning when it comes to making decisions about the priorities of what do you put in place, what do you invest your time and effort in. What was that like for you when you're trying to work with back to IT and business working together? Can you elaborate on that and like the length of time, all that went into it?
Yeah, so I think that actually is more of a go forward question. For this go around, we were a little bit surprised by the level of questions. And if you go back to those 12 controls, I would like to emphasize that there's a drill down of every one of those controls. I mean, have you done a ransomware attack? Tabletop? Yes, you have. Okay, well, can we see it? What was the outcome? What did you do? What's the plan? And so if you think of those, it really is 100 questions. And so for us, it was much more of a scramble to get the information together and presented. And if you think about that, I mean, you want legal input, right? Some of this is company confidential. What can you disclose? And so to answer your question, this year, it is, back to Tom's point about the roadmap, we were asked about the roadmap, what is that roadmap? Where are going to be the investments? And for me, it's to match it up with what was the information that was pulled together, where are areas of improvement, how will those be prioritized? So by next January, February, I'll have a complete package and hopefully kind of less surprises and scrambling. I mean, with our business people, the product security people, I mean, this was me, they were totally surprised by me calling them saying, oh, hey, you want to join a call with an insurance underwriter that has a list of 20 questions for you, right? So I'm hoping for next year to avoid all of that.
That's great. We do have a few more questions that have come in. They're kind of specific here. So let me see who wants to take this. So my business uses a DMS that I pay a company monthly to use their service. All my business critical data is within the system. When talking with insurance companies, they are unhappy that I don't have a backup solution, but I don't have anything to back up. How do I deal with something like this? I don't know if that's a Tom question or not, or
well, it's a
third party.
No more, right? If all your business critical solution data sits with a provider, right? There still should be a way to obtain a kind of a third copy, if you will, offsite, off-domain copy. Plenty of people do it. We do it for clients all day long. Throw it up in the cloud. It's accessible. That's probably going to satisfy that. It's potentially your partner that provides a service may not like that because it may have something to do with their inner workings, right? Then you need to evaluate, as Aaron alluded to, how are you treating your vendors now? What are their security policies, or what's their posture? I think it warrants a deeper call to understand the applications and things, but there should be no reason that you shouldn't be able to get that offsite third copy.
Great, thank you.
I think that's an excellent point because, we're big fans, and I think, in general, the industry is big fans of the improved level of controls that cloud or software as a service providers can offer. But I think the metaphor we use is that it's brittle. It's very stronger in some dimensions. They can do a lot of things a lot better than you can, but it's far more fragile in others. And as a result, when that provider goes down, you're really in trouble, because not only have they had an issue, but you're at arm's length from it. And that's what we're seeing with some of these recent events that have been publicized. That doesn't mean that you shouldn't leverage them. They're probably terrific. But as Walter said, you've got to have plans B, C, and D up and running. Using an outsourced provider changes the math. It doesn't eliminate it.
Yep. Another one, are insurance companies concerned about security awareness training of the organization, staff, and C-suite?
Yes.
Yes, yes, and yes.
Mhm.
Yeah. It was on that list of controls that we had up there on the bottom row.
Yep.
How often are you monitoring? Are you following up with people that fail? How every aspect of it.
Yeah, and I think one thing to add to that, I see this more often than not. I use the term for convenience. We have users on the network that are on older operating or unsupported Windows systems because they're the owner, or they've been here a long time, and they don't do the training, right? We don't have our executives do the training. Why not? And I know that the answer is for convenience. It's inconvenient for someone to do that. We treat these questionnaires as pass fail. I'm sure Aaron and Tom can relate to that. It's kind of a pass fail. You either do it or you don't, right? It's not like, well, we do it for 20 employees.
Yeah.
So I mean, take that to heart. It's a pass fail exam. It's not A, B, C, D, F.
Yep.
Yeah, and particularly with those senior executives, if they're not part of the training and the practicing and rehearsal around incident response, good luck.
Yeah.
Because now that you're going to have a real crisis, and you're going to be bringing in a whole bunch of people who have to make the actual decisions, who are not familiar with your plans or preparation at all. So it's even more critical with those senior executives, both because they're higher profile targets, as well as because they're integral to the organizational response. They've got to be part of it.
Increasingly, hackers are not hacking into environments anymore. They're simply logging in, and they're logging in with stolen credentials. And we have seen from a SOC perspective, pretty much, I think it's like 68 to 70% of all breaches or attempted breaches in the last 12 months started with or involved a human in the process, where a human was being tricked, deceived, asked to give up their credentials, to essentially walk a bad person into the environment, metaphorically speaking. And so awareness training is absolutely critical, and everyone needs to take it, because at all levels of the organization, we've seen CIOs and CFOs get tricked into giving out their credentials, and then that facilitates a business email compromise attack. So it needs to be at all levels, whether you're, working the front door, if you're a janitor, if you're a CFO, managed awareness training needs to be happening at all levels within the organization. It's critical.
And I would play off those two comments from Tom and Tim real quick. In my role, I spend an inordinate amount of time during an incident educating the executive staff on what's actually happening and what expected outcomes you can see based on where they're at today. So, they always ask, when are we back up? Well, that's a super question, right? If we had the silver bullet, this would be our complete line of business. They don't understand the inner workings in many situations, and they are making fairly large financial decisions that have to be made very quickly. These aren't things that can go for board review on the next Tuesday of the second month. These are things that have to happen within 24, 48 hours.
Walter, can you speak to the risk assessment that we will be sending to folks after this?
Yeah, I'll talk to it real quick, Scott. I know we're running out of time, and I want to give everybody a chance to close. So ISG has over the years compiled, similar to what Tom referred to, over the years we compile the applications and surveys from underwriting to understand, as it's evolving, what are we looking for today versus what were we looking for 2 years ago. So 2 years ago, it's a very relatively simple process. It was nowhere near where it is today. And so those questionnaires, so we've put together what we call cybersecurity risk self-assessment. It's just a reality check. Be honest with yourself. Do you have it or don't you, right? It's a yes, no. It's not yes for half the organization and no. If it's half, it's a 50-50, then the answer is no. It gives you an opportunity to go through. These are questions. I didn't make these up. We didn't make these up. These are coming straight off an underwriter's application. And probably not as thorough as it needs to be, because I know in the last 2 months those have changed dramatically, and so we'll probably update that as well. But this one is a fairly good overview. If this is one where you check more no's than yeses, probably need to talk to a partner or somebody to get some assistance to help you. Erin went into great detail, right? So hers is much deeper than what you would see on our simple one, mainly because take the 30 seconds, a minute to go through it. It'll help you understand at least fundamentally from where you are at, and it's something you can share with your leadership then.
Any parting words from the group as we kind of wrap this up here today?
I mean, I think mine would be to forge the linkage as we've discussed. I mean, someone within the company is probably buying insurance, and forging that relationship with the CISO, IT, and looking at this assessment would be my advice.
Yep. Great. How about you, Tom, from the insurance world perspective? Anything else? I know we've talked about a lot already.
Yeah, thank you for the time. I think that my advice would be that organizations take the guidance and the clues the insurance industry has to share. Sometimes it's a little scary to think that the insurance industry might have something valuable to add around a technical topic, but really this is all about cyber risk, and the insurers are on the front lines of that. And so I think that there's a lot of valuable information, and organizations should take that guidance and then use it not only to make themselves more insurable, but also safer, better protected organizations.
Great. Tim.
Yeah, two things. One is I want to reemphasize what Erin just said, which is forge that relationship. If you're on the business side, talk to IT. If you're on IT, talk to the business, get that relationship going. Second, don't just look at some of these controls as a checkbox for insurance. Yes, sometimes they are, but look at the proper implementation, the proper monitoring, the proper processes around these controls if you really want to prevent a breach from actually occurring.
So isgtech.com/resources was where we post a lot of our webinars, our content and information that can help you. There's my phone number if you want to jot that down. Give me a buzz. My email, you will also get it in the follow-up information. But just want to say thanks again to everybody. Please fill out the poll at the end. Let us know how we did, and let us know what topics you guys want to hear about in the future, and we'll do it again. Until next time, thanks so much. I appreciate it.
Thank you.
Yes.